Good morning. You're watching Market Cafe with me, Shreyansi Singh and Lisa Fernandez. And over the next 1 hour, we'll take you through news and updates from within the country and across the globe. Good morning, Lisa.
Good morning, Shreyansi.
How's the handover coming in from the US markets?
Right, so good morning to all you viewers. Let's start with the US markets. It's a pretty decent picture actually. So major indices it gained for the third straight day, and talking about the indices on particularly S&P 500, it gained around 0.4% and it closed at its highest level since March 2022. Dow Jones also advanced 0.4% to finish at its highest close since Jan 2022. Nasdaq Composite also added 0.2%. Now, investors will be looking ahead to that important US Fed two-day policy meet that ends on Wednesday and it begins tonight. And Fed is expected to maintain that Fed fund rate steady in that 5.25 to 5.5% range. Chair Jerome Powell is also expected to reiterate his commitment to lowering the inflation. Now, note that this is the final meeting of the Fed meet this year, and talking about the CPI, it's coming at a time when the CPI is also expected, it's slated for release today, and the CPI annual rate is projected to slow down from 3.2% which was seen in October to 3.1% on year-on-year basis. Even the producer price index that is slated for release on Wednesday. So it's a week of inflation data as well as it's quite a busy week with all the Fed outcome also the deciding factor for the market ahead. Inflation outlook also, it hit the lowest level since April 2021, that is more than 2.5 years. That is what the New York Fed survey shows. Talking about stock specific action, it was Macy's share. It surged around 19% and it was on the hopes of a $5.8 billion buyout. Well, talking about crypto stocks, even that slid and it was dragged by Bitcoin price. Bitcoin that fell by around 5% in today's session. It was around at that 41,000 level. And talking about stock futures, now they are currently trading flat and it's ahead of the key inflation data. So a lot of moving parts for the US market, but let's move on to the European market. European market is also, the US market, it rubbed off on European market because this is ahead of the Fed meet outcome. DAX was up 0.2%. Stock 600, that was also up 0.3%. But FTSE, that was down slightly around 0.1%. So that's actually the handover coming in from the US as well as the European market. So Shreyansi, the market is looking pretty good, but I can't say the same about crude as well as gold prices. They are all falling. Like, what's the reason for that?
Absolutely, yes. Can't say the same about oil prices at all because oil prices were largely flat on Monday. And this was, of course, as worries persisted around crude oversupply despite OPEC plus cuts and softer fuel demand growth next year. Now, when you look at WTI, that rose around 9 cents or just like 0.13% to settle around that $71 a barrel mark. When you look at Brent crude also, that contract also gained 19 cents to settle around that $76 a barrel mark. Both contracts jumped more than 2%, mind you, on Friday, but were down for a 7th straight week, which was their longest streak of weekly declines since 2018 on lingering oversupply concerns. So a lot of factors that the market is currently looking at. Now, despite a pledge by the OPEC Plus group, which comprises the Organization of Petroleum Exporting Countries and allies, including Russia, to cut 2.2 million barrels per day of crude oil production in the first quarter, investors still remain skeptical about compliance. Now, when you look at output growth in non-OPEC countries, that is expected to lead to excess supply next year. In fact, this week, investors are also watching for guidance on interest rate policies from meetings at 5 central banks, including the US Federal Reserve, of course, and as well as US inflation data, like you mentioned, to assess the potential impact on the global economy and oil demand. Now, recent price weakness drew demand from the United States, which has actually sought up to 3 million barrels of crude for the Strategic Petroleum Reserve, or SPR, in March 2024. Now, when you look at gold prices, they also fell as the dollar and US Treasury yields firmed, like you mentioned. Now, when you look at the yield on the benchmark 10-year Treasury note, that was 3.1 basis points higher, around that 4.27% mark.
Right, so let's move on to some important global stories. Warren Buffett led Berkshire Hathaway has once again reduced its stake in computer giant HP, and as per the latest filing, the company owned 51.5 million shares, which is half of what it owned at the end of September. Now, this brings Berkshire's stake in HP to 5.2%, worth about $1.6 billion.
A stark warning coming from strategists at BofA. China's property downturn is set to last for years, and a drought of deals in the sector is unlikely to end soon. The banker has warned that the slump could last years and the recovery in the sector could be long drawn. Instead, they remain more optimistic about Japan's real estate and Singapore REITs.
And Ford has made a significant shift in its production strategy. The American auto giant has slashed the projected production numbers of its electric F-150 Lightning for the year 2024 by half. Now, the decision comes as a stark contrast to the company's earlier actions, where it had amplified its manufacturing capabilities for the electric vehicle. Changing market demand was the reasoning given for the steep pullback.
Festive cheer has not rolled in for Hasbro, the giant toy company known for household names like My Little Pony and Transformers. The company is facing a rather grim holiday season, with weak toy sales continuing to affect its bottom line. After cutting down its workforce earlier this year, Hasbro is now laying off an additional 1,100 employees in a bid to stabilize its financials. This decision underscores the challenges faced by traditional toy makers as they grapple with shifting consumer trends and a dynamic retail landscape.
And according to the latest poll from Iowa, Donald Trump's campaign is unprecedented momentum, and his lead has not just grown, it has significantly outstripped his closest Republican competitors. Now, this result comes as a notable development considering Iowa's critical role in the Republican nominating process. While Trump's rivals are still in the race, the gap between them and the frontrunner has widened. Now, this could suggest that Republican voters in Iowa, they are consolidating their support around Trump, who has maintained a robust base of his support since his time in office.
Well, with this, we're timed out on this segment, but we'll see you with more news and updates on the other side. Welcome back. Thank you so much for staying tuned in. Well, let's shift focus to mutual funds then. And mutual fund activity for the month of November. Now, where have mutual funds added exposure and what did they buy and sell? Somit is standing by with that roundup.
Well, if you see in the month of November, mutual funds have deployed close to 15,510 crore rupees in the Indian secondary market. Now, this amount is lower than what they did in the previous month, which was close to 19,930 crore. Now, if you remove the NFO amount, then the inflow amount is actually lower at around 13,600 crore rupees as against 17,000 that we had seen in the previous month. Also, the cash level when it comes to mutual funds have increased marginally by around 22 odd basis points to 4.9% from 4.7% seen in the previous month. Now, when it comes to sector-wise exposure, mutual funds have added exposure when it comes to healthcare, industrials, utilities and consumer discretionary, while they have reduced their exposure when it comes to financials, staples, that is consumer staples, agrochemical stocks and in the IT space. Now, when we see stock specific, in the large cap, mutual funds have been continuously adding Zomato, Gale and Power Grid to their portfolio. And on the sell side, if you see Indian Oil Corporation and BPCL, now share prices of both these companies were up around 25% in the month of November, and mutual funds have utilized this as an opportunity to exit this counter. Apart from that, there is SBI and Bank of Baroda, which were also among the top 5 sell counters when it comes to mutual fund. Among mid caps, now if you see 3 out of the top 5 stocks are PSUs, that is NHPC, Petronet LNG and Union Bank of India. And on the sell side, REC, now that company's share prices were up around 21% and mutual funds have utilized this as an opportunity to exit this counter. Apart from that, it was Ashok Leyland, Indian Hotels, IGL and Macrotech among the sell names. And when it comes to small cap, Piramal Pharma prices were up around 21% and despite this, mutual funds have not shied away from adding more shares on this counter. And Suzlon, now their share prices were up 33% and that was the top sell stock from mutual funds. And Manappuram Finance rose around 20% in the month of November, and mutual funds have utilized this as an opportunity to exit this counter in the month of November. So keep an eye out for these stocks in trade.
Right, Somit, thank you for taking us through those mutual fund in November, but let's get stock specific. I'm talking about Mankind Pharma. So the news is that there is a big block deal which is brewing in that counter, and a clutch of investors, they are looking to trim off stake in that company. So this could actually pave the way for its inclusion in the MSCI index, given that it meets certain criteria. So what will be the MSCI impact, and what is the offered deal, and who are these investors that are looking to pair off the stake?
Well, there are kind of three news flows when it comes to Mankind Pharma. First is the fact that 7.9% of the equity is on the block, and the sale is expected to happen today. So 6.9% is the base issue, 1% is the green shoe option that the sellers have. There are four different sellers: Beej, Link Investment Trust, Carnhill, and Hema CIPEF, which is a fund. Now the price at which they are looking to sell is at a discount of around 7% to yesterday's closing price, and the offer size is anywhere between 4,900 crore to 5,650 crore rupees. Also, do remember there's a lock-in of around 90 days on the sell. The bankers of this deal are IIFL Securities and Kotak Broking. Now, the second news impact is the MSCI impact. Now, because of this big block that is expected to happen today, the free float of Mankind Pharma is expected to increase significantly from 10% currently. And also, if the share prices rise by around 18% till January 17th, then as per Nuvama, there is a high possibility that Mankind Pharma could actually get included in the MSCI index. Now, this next review is expected to happen on Feb 2024, and on that review, Mankind Pharma actually has a high chances of getting included. Now, if the stock gets included, then the inflows could be anywhere around $112 million US, which could be positive for Mankind Pharma as per Nuvama. And this third news is the FTSE impact. Now, FTSE had already announced that Mankind is expected to get included in the index on December 15th, and the news flow and the inflows that could happen because of this inclusion is close to 28 million. So keep an eye out for Mankind Pharma in trade. Three different news flows. First is the big block that is expected to happen. Second is the potential MSCI inclusion, and third is the inflows that could happen because of the FTSE inclusion.
Well, thanks, Amit. So we'll definitely be keeping an eye out for Mankind Pharma. But in the latest from Infosys, it's CFO Nilanjan Roy who's resigned from the post. The IT major appoints Jayesh Sangrajka to take over the post. This is effective from March 31st. Anisha Jain is standing by with more details on the phone line about this change of guard. Anisha?
Well, yes, let me break it down in two parts. One is the appointment of Jayesh Sangrajka, and the second is, of course, the exit coming in of Nilanjan Roy. Let me talk about the first part. As far as Jayesh's appointment is concerned, he's been part of Infosys for almost 18 years now. He, of course, has total experience of 25 years. He already was the deputy CFO of the company. So in that sense, the leadership continues, and there won't be a big flux at the top end of the leadership. So that's one silver lining perhaps. But the reason why the ADR, which is being traded in the global exchanges right now, is coming under pressure is the fact that we have seen a slew of exits, especially at Infosys over the last 12 months. There have been big exits that have happened at high levels, right from Ravi Kumar, whom we know has now joined as Cognizant, to, of course, Mohit Joshi, who's now joined as Tech Mahindra's CEO. There have been a slew of high-level exits at Infosys over the last 12 to 18 months. This coming at a time when growth prospects do not look that good. In fact, the company has been slashing its guidance for 2 consecutive quarters, and it's pretty much, very much flat for the year FY24. So all of this raises a bit of a question right now. Having said that, yes, as I pointed out, the silver lining is that there's a continuity of sorts because the deputy CFO gets promoted to CFO, and the stock impact right now is limited to 2%, but we'll see how it plays out. To be honest, the impact of a CFO on an IT company's business is fairly limited. So we'll see that cushion coming in tomorrow. But nonetheless, the fact that there's a lot of leadership change is something which is a bit worrisome. Back to you.
Right, Anisha, thank you for sharing your perspective on that. But staying with the topic, we also spoke to Sandeep Agarwal, the fund manager of Sovilo Investment Managers, to know his viewpoint on the same. Let's listen into a bite of the conversation we had with him.
See, there are two ways to look at this exit. One way is that, from the perspective of the company, there is a continuity. Deputy CFO who has been for a long time, Jayesh Sangrajka, he knows everyone in the investor community. They have been in the position of deputy CFO for now 7-8 years. So I think from that perspective, elevating him is a natural choice and good. Also, Nilanjan going, if you see it on a standalone basis, we don't, there are not too many points to take along with that. But if you see this exits along with the other exits which has happened in last 12 months, generally, investors will be little worried that, all the top people are leaving, even if the role does not directly involve business, but definitely, CFO also is involved in client meetings, is involved in pricing and all those things. So if it is taken in a total way, I think there'll be some concerns, but otherwise, Jayesh is a very strong candidate and he has been with the company for a long time.
And the world has been looking towards India when they think of moving out of China for the China Plus One strategy. But FICCI's president, Anish Shah, is of the view that India needs to stand on its own, not as a substitute to China. Here's an exclusive conversation that we had with him.
We are seeing a number of other Indian companies. This is a very important change in mindset and a trend that's emerging, which is Indian companies are making products that are best in the world and are winning in India against global competitors. And as that happens, that sets the stage for Indian companies to be able to take these products around the world and win in markets around the world against global competitors. That is critical for Make in India for the world. There is a second aspect, which is diversification of supply chains, which is what you referred to in a sense, where companies around the world are looking at India to come in, and which also is positive for the country, because that is what's going to create greater investments in India, greater manufacturing in India, and allow us to build stronger manufacturing hubs where we become the manufacturer of the world. Right? I've always cringed when I hear China plus one, because why would we be a plus one? India has to stand on its own feet, and India will stand on its own feet as we got greater self-reliance, greater R&D in the country, better products that are being developed, and that will allow us to win across the world.
There were three large issues which India Inc. in a sense had raised, and they raised on various other platforms: land, labor, and cost of capital. While on the taxation front, a lot has been done a couple of years ago, so that in a sense is a big reform. But let's talk about land, labor, and cost of capital. For India to grow, these three aspects, we have to be competitive. How would you map the landscape for us in terms of competitiveness?
I'd say overall in terms of competitiveness, Nikunj, a lot has been done. And let me start with that first. If you look at infrastructure, both digital and physical, tremendous progress. We would rank among the top in the world from a digital infrastructure standpoint, maybe at the very top. From a physical infrastructure standpoint, a tremendous amount of momentum over the last few years, and that momentum is continuing. There is more to be done on that space. It is bringing down logistics costs. Significant reforms like GST have helped in a big way as well. So we've seen a lot done from an infrastructure standpoint. In terms of ease of doing business, again, we've seen great progress. And in terms of developing manufacturing, the PLI schemes have had a huge impact in jump-starting manufacturing in various sectors. So these are three areas that have done extremely well. As we think about land, labor, yes, there are some challenges, and I think there's more work to be done. We live in a democracy where we have to rightly look at views of all stakeholders, and that's one role that FICCI will play in terms of examining those views. FICCI's vision is to look at how do we be a thought leader and work with our stakeholders, which is our members as well as our government, to be able to create a much stronger economy. And in that context, we will work with our stakeholders to be able to examine these topics and hopefully put forth suggestions that may meet the needs of everyone in our democracy.
Right, so let's shift focus on the sugar sector. Sources are now telling ET Now that sugar industry stakeholders are set to meet the central officials over the ethanol conundrum. There's a lot of ambiguity surrounding it. Samir is here to tell us what he's picking up from the sources. Samir?
government's big and bold move disallowing the sugar mills and distilleries to use sugarcane syrup and juice for making ethanol has brought in a bit of setback to the sugar industry. And that is the reason that now the industry or the important stakeholders, they are looking to get a better clarity in terms of policy roadmap from the government's top head. What we are getting to know from our is that the sugar industry is likely to meet the PMO officials Tuesday evening, and this meeting will be more on to understand that what is going to be the policy roadmap, and if this decision is a temporary pause, then how the government will move forward. If the crop yield improves, then what is going to be the government's step. So on this important aspect, this important meeting between the PMO officials and the sugar industry on the issue of ethanol is likely to take place on Tuesday, December 12th. But we are also picking up from the sources that food ministry officials, they have maintained a stand that this decision is a temporary pause. This is going to be reviewed periodically. In a month, this decision will be reviewed, and based on the situation, based on the crop yield, based on the estimate of sugarcane production, the decision might be reviewed and then a corrective step might be taken. But as of now, sugar industry is looking to get a better clarity in terms of policy roadmap, and they are going to meet the PMO officials Tuesday, December 12th.
Well, thanks, Amir, for that exclusive. Well, sugar stocks have definitely been in the sweet spot, so we'll definitely be keeping an eye on that meeting. But as chatter grows of a slowdown in the FMCG sector, ET now caught up with the biggest voices in the FMCG sector to understand their demand outlook and whether they're cautious going forward. Listen in.
FMCG could be better, and while we've been saying that things are better and they're around the corner, and they possibly are, we also have to be true to the fact that what do we need to do in order for this industry to grow faster. So while there might be some short-term ups and downs, there might be money coming into rural markets, etc., which may give some short-term bolster to FMCG volumes. The question that we are engaging with is what are the longer-term things that need to be done in order to grow this category faster.
Unlike what people are talking about rural slowdown and all that, I personally don't see for our products. One, the branded share of commodity is very small, hardly 8 to 10%. So when you see the growth that is coming, both from urban and rural, is only because it is converting from loose to packed, from a lower level brand to a better brand. That is what is happening in the country, and we can see that after COVID, consumers have become brand conscious, health conscious, and they are looking at good quality, hygienically packed commodities branded. So we see a good growth.
Volume pickup is happening. We are seeing volume pickup both happening in urban and also rural. Rural is also growing, but not to the delight that we would want rural to grow. If you look at 10 years prior, rural was ahead of urban. Now rural is behind urban. I think because of the monsoon there was a little bit of problem. But I think going forward we are in for growth in both urban as also rural both.
Right, so SEBI is mulling a reduction of the minimum ticket size for SIPs to as low as 250 rupees per month. Now, this is as per sources close to ET now, that's what they are saying. Currently, it's at 500 rupees a month, and remember that in November, SIPs hit a record high, crossing that 17,000 crore mark. Now, to understand what this means for the industry, we caught up with Value Research, Dhirendra Kumar. Listen in.
It's not about money, it is about financial inclusion, because 250 rupee coming from 5 crore people could be, I think it is quite a habit forming thing. But if we look at what has happened in the mutual fund, this is the only category of retail financial product, retail savings and investment product for Indian citizens, where you have large number of happy customers. I haven't come across anybody who says that, oh, I bought this ULIP and, I became wealthy, or I did this or I did that. And, in fact, on the contrary, all the traders in the markets, they came out with this report where 92% of the people lose money effectively. But still investors are quite excited about it, and just for the, for the fun of it. But here you have a category of product which has been democratized.
Well, with this, we're timed out on this segment, but we'll see you with more news and updates on the other side.
Welcome back to the show, and we are on that part of the show where we get stock specific. So let's shift focus on Spandana Spurti. Well, they had an analyst day. So let's look at the important key takeaways coming in from the management. They aim for an AUM of around 28,000 crore rupees by FY28. And Vamakshi is here to share more highlights on this. Vamakshi, good morning. Take us through all the key takeaways.
Well, yes, Spandana Spurti has unveiled Vision 2028. This has come in after the company achieved most of its targets that it had set out in the Vision 2025 plan, barring the return on equity target. Now, let's look at what the company has actually unveiled in its plan. The vision for the company is to have an AUM of almost 28,000 crores by 2028. And in fact, this would be a growth of almost 20% CAGR, which is in line with largely the MFI industry. They will be following a consumer acquisition-led growth strategy, and in fact has already identified 7 growth states. In fact, they also plan to support this growth by an increase in the borrower base to almost 6.2 million borrowers by FY28. The management, however, guided that they will continue to follow the current traditional GLG model versus the lending based on individual capacity model, and this is being done in order to avoid concentration risk as well as follow the basic discipline of microfinance. They are also transitioning from monthly model to collection model, and in fact this in turn will ensure faster repayments, lower concentration and superior underwriting. So given all of these factors, they're actually hopeful of maintaining the credit cost below the 2% mark. At the same time, they also aim at a return on assets of almost 4.5 to 5% and return on equity of almost 18 to 20%. Not just that, the company also has a fully operational subsidiary, Chris Financial, and this subsidiary in turn will engage in small ticket LAP as well as micro enterprise loans for small shop owners and MSME customers. The average ticket size here is almost 5 lakh, and in fact the management is expecting the AUM from this new business to contribute to almost 10 to 15% of the AUM in FY28. So largely a lot of positive commentary has come through from the management, and that could be a potential re-rating trigger for Spandana Spurti. So keep an eye out on this counter. Absolutely, Vamakshi. So we'll definitely be keeping an eye on Spandana Spurti, but ITC is also all set to host its annual analyst meet today. What are the verticals that CLSA is expecting updates on? Winnie is standing by with that update. Winnie?
Good morning, and absolutely what we're talking about in terms of expectations from today's ITC analyst meet that is being held is that one, and any update that would be coming in on the ITC's next strategy, especially in the research and development front, as well as in the supply chain and digital front, is something that we're keeping an eye out on. Other than that, medium to margin aspirations of the company in the other FMCG business is a key factor to watch out for, as well as in the cigarette business, what's the growth outlook of the company, as well as assuming the consumption has normalized. That's the key factor to watch out for as well. Any updates that we could be getting from the company in terms of the hotel business, the listing, where is the progress going so far as well, are the key factors to watch out for from ITC's analyst meet today. So let's keep an eye out on that.
Thank you for taking us through those key takeaways of ITC analyst meet. Well, let's look at other stocks that will be in focus today, starting with Dixon Tech. Dixon's wholly owned subsidiary, Paget Electronics, they have been awarded manufacturing contract for by Lenovo, and this is for manufacturing of IT hardware products under the PLI 2.2 scheme. Moving on to RVNL, the URC JV, they have emerged as the lowest bidder for 5 elevated metro rail stations and ramp between chainages for the Indore metro rail project, and the consideration for this is around 543 crore. Remember that RVNL's share in this JV is around 51%. Moving on to Relaxo, they have acquired land parcel at measuring around 30 acres in Rajasthan, and it will be used for setting up the manufacturing facilities for future needs. TTK Prestige also will be in focus as the company's manufacturing facility in Chennai disrupted. That was due to the cyclone, and production is also expected to be resumed within the next 10 days. Well, there has been a loss of production for 5 days now and the exact financial impact that is being ascertained as of now. And lastly, on JTech India Limited, the company has received a new order from JTech Brazil Limited, and this is for the supply of loose child power. The order size is around 183 crores. So, well, all these stocks will be in focus today on the back of these announcements. Shreyansi?
Well, absolutely. So these are the stocks that will be in focus on the back of news announcements, but there are also stocks that will be in focus on account of brokerage notes. Gaurav is standing by with that roundup.
So, yeah. So, as you said that we have a few stocks which are buzzing on the back of the brokerage notes. And the first one we have is Godrej Consumers, where Goldman Sachs has maintained its buy rating with a target price of 1185 rupees per share. Now, they believe that there are multiple turnarounds which are happening in the company. The launch of the new liquid segment is going to be promising for company's revenue going ahead. And accordingly, they also believe that the Raymond business, which Godrej recently acquired, is on track to deliver synergies, and that is why they have maintained buy rating with a target price of 1185 rupees for Godrej Consumers. The next one we have is Dr. Reddy's, where we have contra views. So the first one is coming up from Macquarie, where they have maintained outperform with a target price of 6,300 rupees. This is specifically on the back of the Form 483 which the company has received. So Macquarie believes that the market is actually overreacting because the stock was down almost by 5% yesterday, and they also believe that the sheer number of observations were high, but all observations are procedural in nature and there is nothing serious about these observations, and they see a little risk of escalation to an official action for the company, and that is why they have maintained outperform rating with a target price of 6,300 rupees. At the same time, we also have JP Morgan, which has maintained its underweight rating with a target price of 4,610 rupees. They also believe that the Form 83 reaction is a little overhang in the market, but they believe that from the 10 observations that are mentioned in 483, 1, 4 and 7 are actually serious, and the rest are which are moderate and procedural in nature, and that is why they have maintained underweight rating with a target price of 4,610 rupees. Apart from that, we have Morgan Stanley talking about Infosys, where they have maintained overweight rating with a target price of 1,600 rupees per share. So this is specifically coming on the back of the news that the CFO has resigned recently. So they believe that the CFO's resignation was actually unanticipated, and we may see some kind of sentimental reaction in the market going ahead. But this transition of CFO is expected to be smooth going ahead, because the role of CFO has been fulfilled by the internal candidate, and that is why they have still maintained overweight rating with a target price of 1,600 rupees per share.
Well, thanks Gaurav for taking us through what's on the brokerage radar. So we'll definitely keep an eye on these stocks, but focus will be on Sapphire Food because they conducted their management. So let's go across to Ashesha. Ashesha, good morning. What are the key takeaways from the meet? What are they saying on the growth outlook, on the expansion demand trends?
Well, yes, so Centrum met with the management of Sapphire Foods, and on the back of that, they've come out with this note. First up, they've spoken about demand, where on a sequential basis, demand has largely remained constant, although on a year-on-year basis, they see demand has seen a pickup. They say they've not seen any significant improvement in demand on account of events like World Cup, but yes, on a year-on-year basis, demand did see an uptick. As far as raw material pricing is concerned, they say inflationary pressure on raw material prices have now started to stabilize, but they still are at elevated levels compared to historical averages. They say management believes that there will not be any material impact on margins going forward, and they expect modest increase in margins in the coming quarters. Revenue growth is reflected in sustainable EBITDA margin of 20%. Raw material prices indeed have corrected, but company intends to spend more on advertisements going forward, and hence perhaps margins could be impacted in the coming quarters. As far as average daily spends are concerned, they expect an improvement on a sequential basis in the third quarter. They say that the same store growth is expected to be in the range of 5 to 7% in the medium to long term. As far as KFC's average daily spends are concerned, that too is expected to see an increase sequentially in the third quarter. Store expansion meanwhile will be in the range of 120 to 130 with higher media spends and reduced capital expenditure. So yes, they say demand has largely remained stable on a sequential basis, although on the year-on-year basis we have seen an uptick, and margins too, EBITDA margins too, are expected to remain stable in the third quarter.
Absolutely. Thanks, Ashesha. So we'll definitely be keeping an eye on Sapphire Foods, but DLF will also remain in focus on the back of a brokerage note coming in from Morgan Stanley. Now, they've added the counter to GEM focus lists. In fact, in terms of peer analysis, they're saying that it is a proxy for developers and it trades at premium to peers. Now, in terms of the NCR market, they're saying that it's dominating the NCR market as well as setting the price there. So that is the key commentary coming in from Morgan Stanley. And in terms of the valuations also, they've said that the company has its largest developable land bank and is richly valued at the same time. Now, in terms of another peer comparison, they've said that the company is zero net debt, excluding its rental business, which is better in comparison to its peers. So that is the key commentary coming in from Morgan Stanley on DLF.
Right, and we also spoke to market experts Jonathan Garner as well as Neelkant Mishra, and they share their insights on the trajectory of India's growth story. Let's listen in to a bite of conversation we had with them.
Our Sensex target is 74,000. Currently, we think that's relatively easily achievable. Obviously, we'll watch what happens during the election process, and in particular, look at the policy framework. Well, our view is quite clear. We strongly prefer India to China. We expect Chinese nominal GDP growth to be less than half that of India next year, to disappoint consensus again, below 5%. We actually are starting to see the currency becoming more volatile. And the ability of China to generate compound earnings per share growth is quite limited. Corporate return on equity has been falling relative to India and other emerging markets for some time.
Nominal GDP growth itself can perhaps do a bit better than it was doing pre-pandemic because of the return of the capital formation. And on top of that, the profit share of GDP, which had shrunk dramatically over the previous decade, is now holding up to nominal GDP. So if you look at, say, the profits of the 1,500, 2,000 companies at the top, the largest companies, and look at the profits as a percentage of GDP, that ratio had dipped very sharply in 2017, 18, 19, but now we're starting to recover. And therefore, profit growth can keep pace with nominal GDP growth or maybe do slightly better. So the outcome for the market on the whole is a continuing period of time correction.
Well, with this, we're timed out on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Lisa Fernandez, and the entire team that put this show together, thank you so much for watching. The market takes the action forward.